Hello everybody, my name is Tuf. Welcome to my channel. Today I will be continuing the series of how to build an operating model that I started 10 days ago with Miss Micro. And today I'd like to present you a French company. It's a little bit different, small cap also. And this company is Catana Group, who is making cruise boats and catamarans mostly. Why I am interested in this company? Because interestingly enough, they have had a very good outlook, very good growth in the past, with an interesting operating leverage. And also, recently, they've been sharing some information about the outlook of their business, which is really, really interesting. And if you combine the past, the present, and the future of this company, you can see that there's still a lot of potential that I would like to share with you, and then just to explain my best how to evaluate potential share price, making assumptions. I remind everybody I'm not a financial advisor, so you have to do your due diligence before buying any stock. But personally, I am invested in this company. Okay, so Catana Group, yes, is a French company, has around 250 people. I go directly to the, let's say, what I call the DNA card is I summarize everything, all the, let's say, the metrics of the company. So they have a yield of around like 7% at the moment, so a P around 18. But what I'm really interested is that over the last 3 years, you can see that the OPEX has been increasing maybe like from 5 to 12 million dollars. But the gross profit actually has been really increasing much more. And this is what is giving you the operating leverage year over year. So that's the past. That's the company as it is, increasing gross margin also to 30%, 31%, and increasing revenue over the last 4 quarters. They have enough cash, a little bit of inventory, and very little debt, around 8% of the total market cap, which is 238 million euros. So when you look at the past, this is interesting. This is a good company, solid, enough cash, enough, not too much debt, and also a good catalog of products. Now, recently, they on the 13th of April, they released their first semester 2021-2022. So here in France, they operate by semester and not by quarter. But the very interesting thing is that they are very, I'd say, transparent about the backlog for the next semesters. And as you can see here on this extract that I made here for you, this is just amazing. In around 10 lines, they give you the booking for the next semester, which is 85 million euros. They give you the booking for the next year, no, so for the total year, which is 155 million, which confirms, I will show you. They also show that there's a 210 million euros backlog for the next year, and even more backlog for the year after, which is already building rapidly, knowing that it's in the next 2 years. Also, the last super important information that I just provided and that just comfort us, at least comfort me as an investor. If you don't know how to read French, I will translate for you. But basically, they say that the group could increase their selling price to accommodate the increase of raw material. So basically, inflation of raw material will not impact their margins. And that's super important, let's say, statement to add this into the operating model, because a gross margin could deteriorate within the next quarters because of inflation or things like this. But definitely here they state it black and white that it will not impact them. Okay. So based on this, I try to extract this data and put them in a table so that we can start building our operating model. And this is how it looks. So bear with me because here the data are a little bit shifted. So in April 2021, this is their first semester 2020-2021. Sorry, here. First semester 21-2022. They reported 70 million euros. And here, this is where I extract the data from the statements. basically that they have 85 million booking for the second semester. So I add that here on the revenue, which gives you 155 for the year, which is what they were guiding for. So the math is okay here. And okay, after I just added a booking for the 2022-2023, which is 210 million. So I just make an estimation of 100 million plus 110, which gives you 210. And for the next year, which is just a temporary booking because it's going to increase over the next quarters, was 160 million. So that's why I just put 80 million and 80 million. But for now, what is super interesting is maybe not even look at this next year, but just at the 2022-2023 and start building the operating model based on that. So the yearly revenue, I don't invent it. It's based on the booking that they provided. The gross margin, I'm very conservative. I mean, not conservative, but at least I kept the gross margin at 30%, like it was over the last few quarters, because they said that the inflation will not impact their gross margin. So I kept 30%. From there, you get a gross profit. And the OPEX, so the operating expense, because they are hiring more people at the moment, they are mentioning that also in their last, let's say, earning report, that they want to hire 200 people in total, but they already hired, I think, 164. That was mentioned in the previous news, but they are still hiring more than 70. That's why the OPEX, when you see here, sales, generative, and administrative, will go probably from 12 to 15 to 18. So I made this as an assumption. It might be 20, it might be 22, I don't know. But I made it progressive. So 15 for this year and 18 for the year after. From there, you can guess how much will be the net income. So you subtract gross profit minus the OPEX, you get the net income. And I should add here the tax, but I don't really know how much they have as a tax, so I didn't put any tax on this net income. But if you want to refine it, you can really, let's say, maybe subtract 10% of it to get an earning per share. How do you make the earning per share? Simple, as I mentioned on the SMSI video the last 10 days, that I really recommend because it's I go through the revenue split, so it's quite interesting. You just divide the net income by the share numbers, and then you get your EPS, earning per share. Based on this earning per share, you can multiply by whatever PE ratio you want. But for me, for a company that grows as fast as they mentioned on their booking, basically they go maybe 50% from last year, and maybe another 30% next year compared to this year. The P, I would say, could be possibly between 10 and 20, which would give a share price between 15 and 30 euros. At the moment, the share price is 8.4 euros. It's euros here. So basically, it gives an interesting upside. I think what I really like here is that the company is very transparent. They show that they have problems in hiring, but they are still, let's say, guiding for this outlook. And you can really see that their catalog of boats is increasing. So, for example, this quarter, this semester, they released a new Bali catamaran with a 4.4. Another one, which is a Cat Smart, is a 38 feet. So this is the smallest footprint of their boats, which actually expands their, let's say, their market, and also an ocean class, which is like more like a sportive, I think, boat, catamaran, which is less comfort class, but more sportive. And it's very interesting because they go in all directions. I think this is the most important things that I wanted to share with you. This one is very simple. I just made like a quick table, but it's just to show how interesting it is when a company has a good past, has a good, let's say, news at the moment because they release new models, and also they secure the future by having so much backlog that as an investor, you want to be a little bit safer, to feel safer. And this is really what they provide as in their statement. They provide us safety. And this is what I'm interested in, is not a risky investment, but more something that I can trust. And today, I think Catana Group, so CATGR, I don't know if you can find it under another ticker name, but in France, this is CATGR. This represents to me an interesting option. So definitely what we can look in the next semester is just to confirm these booking numbers. So it might go up. They might have also problems again in hiring, which might actually postpone the booking. But if you can see on the previous semester, they announced 190 million, for example, euros for 2022-2023, and this 180 million euros transformed into a 210 million. So you can see that there was like an increase of 20 million euros on that semester. So maybe over the next semester, I will provide maybe a graph and then show how the backlog builds up for each of the periods that I'm mentioning in the table. So I think that's it for today. A very brief video, but I hope you enjoy. I think it's very interesting. I'll try to make another one about another company in the biotech industry, but the same, which is giving outlook, a good path and good future. So I'll try to make it soon, but it's going to be also an interesting pick. So I hope you enjoyed. I did, and I see you soon on the next video. Bye bye.